welcome to my channel. I'm Doris. I'm here to share with you about my stock account and today's market update. And as I talked about yesterday, that we're going to talk about Tesla, and at the same time, I want to also cover a little bit about the inflation expectation of this upcoming year. And let's see. So recently, during a Wall Street Journal report that inflation remained moderate in December, providing possibility for the Fed to reconsider interest cuts this year, perhaps at earlier pace. Fed officials expect to keep rates on hold at a two-day policy meeting next week, and may remove from their policy statement that a rate hike is more likely than a rate cut. The declining inflation opens the door for interest rate cuts this year, although earlier next year that Fed officials, many dovish Fed officials became more hawkish as they saw the interest rates were effective in cooling down the inflation, but not as effective as they thought in the labor market and the services market. According to the Fed PCE, a common measure of inflation, it rose to 2.6% in December, the same period last year, while below the 5.2% gain in the same period of 2022. The core PCE price index, excluding food and energy costs, grew 2.9% in December year-on-year, the lowest since March 2021. At an annualized of 3 and 6 months, core inflation was 1.5 and 1.9% respectively. Charles Evans, the former governor of the Chicago Fed, said it was a sign of returning to inflation. These 3 months and 6 months inflation rates below 2% are really surprising. This raises confidence that inflation has continued to return to its lowest level before the pandemic. However, paying attention to the 3 and 6 months percent inflation showing, because the base rate of these 3 and 6% is already rising, that the subsequent inflations may be due to the fact that the original price change was already leveling. Investors are expecting the Fed to cut interest rates in the spring, given that the inflation is falling faster than expected. Still, some Fed officials said they may need to raise interest rates again to cope with a rebound in inflation. In response, Evans said, "Their nervousness is understandable. After all, they have made great efforts to contain inflation and are reluctant to relax their pursuits of 2% target at the last minute. But at some point, you need to recognize that core inflation has indeed fallen somewhat." And the next step, we got Tesla. And as we all know, in the past week, Tesla's market capitalization has fallen by more than $80 billion. And let's take a look at why. Because of missing its expectation for the Q4 financial report, Tesla's Q4 has disappointed investors, and especially after the remark Elon Musk made about the Chinese competition in the Chinese energy, new energy electrical cars. And as of some stats, the Q4 operating revenue was $25.17 billion, up only 3% year-on-year, and operating profit was $2.1 billion, down 4.6% year-on-year, both lower than market expectations. The market achieved an annual revenue of $96.77 billion, up 19% year-on-year. Shareholders' profit under non-GAAP was $10.882 billion, down 26% year-on-year, and shareholders' net interest rate fell to 11.25%. And let's take a look at this number, 46%. It shows that the cost of operating has been increasing or the profit margin has been decreasing. And this is likely to be attributed to Tesla's price war strategy that it has placed worldwide. The price cut in Tesla's model vehicles have shown that the customers are not as excited about getting more cars than Tesla had predicted, but rather it only made the profit margin going down. Throughout 2023, the company delivered 1.808 million vehicles, up 36% year-on-year. The new energy brand price volume, especially in Chinese market, Tesla is the first of domestic open price war brand. But sharply fallen sales is still weakness. It is also making delivery and the revenue growth serious deviation, but also sharply weakened the profitability. At the same time, the company is pessimistic about future, saying that the delivery growth in 2024 could be significantly lower than in 2023. Based on concern about Tesla's future performance, investors choose to sell, but as global leaders in intelligent driving, is Tesla's valuation retracement an opportunity to enter? Smart Finance has learned that among the models that Tesla offer, Model Y and 3 are the main models. However, due to the rapid development of new energy industry, traditional car companies have transformed to new energy, adding new competition to this market share of Tesla. The company's three core markets, US, Europe, and China, especially China, are highly competitive, and the prices of two main models are falling. In fact, in Q4, the company delivered 486.507 units, an increase of 20% year-on-year. The gap with revenue growth will be compensated by the decline in price. From the previous quarter, the significant impact of the price on company's performance can also be observed. In the domestic market, Tesla first launched a price war in 2023 in the first shot, including Model 3 price was as low as 229,000 yuan. Represented by Xiaopeng prices, 800 voltage 100-degree batteries, and advanced intelligent auxiliary standard configuration to 200,000 yuan. A so-called M-Millet SU7 will also join this year, known as Blank said. Model Y and 3 encountered unprecedented challenges. Tesla's failure to give a 2024 sales forecast also illustrates the instability in the Chinese market. However, the sales volume of Tesla brand still occupies second place in the domestic new market. It is worth noting that, in addition to the Chinese market, the company has a strong leading position in European and American markets. For example, in the US, Tesla sold 615,000 units, with a market share of 51.7%. Other models are transformations of traditional car companies, which cannot constitute a competitive threat. And in European market, Model Y sales and market share is far ahead. Clearly, the Chinese market has been a core variable in Tesla's performance. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.